Starting to detect a pattern with some of these new issues, Mike.
Price above the range, open relatively strong. That's generally been the rule. I think it's kind of how you draw it up. I mean, I think Beyond Meat is a singular phenomenon. It doesn't much have to do with general investor sentiment or where the market's at right now. It's just kind of hit the zeitgeist a little bit. But when it comes to something like Chewy's, right, you always, usually in an IPO sector, you have some private equity exits, you have some young companies, you have some more. I think it's a decent mix. And I think that the things you would have been worried about coming into this wave have not come to pass. One would have been every deal gets bought very aggressively and goes to the moon, and it creates this real cycle of froth and speculation. Uber and Lyft told you that's not going to happen. On the other side, you know, the market says, no, sorry, doors closed. We're not going to be willing to do it. So CrowdStrikes of the world, when they start getting criticized for leaving a lot of money on the table, that's the inklings of the froth starting. I think if a lot of companies come out and say, we're going to get greedy, that could maybe slow things down. But right now, I think it's okay.
Kathy, what is it to you that stands out about the winners, the ones that price high, healthy demand, see the spikes? Is it anything that they share in common that you think is attractive right now for Wall Street?
Yes, for sure. I think that investors are really looking for growth in a slow growth economy. It's really important. These companies that we're seeing that are trading so well have strong growth, including Chewy's. And CrowdStrike for sure at 100%. Beyond Meat had 200% growth. So there is some bit of an explanation for the run-ups. And then in addition, investors really want to see profits on the horizon. And the ones that are already profitable, if you look at Zoom and how well Zoom has traded, it's because that company came out with 100% growth and profitability at the same time. So growth and profits, and I would say for many of them that have the cloud-based companies, it's all about recurring revenue and then this land and expand strategy. Chewy's has it, for example. You're selling to a customer and you're able to sell even more to that customer. In the enterprise space, that's a very strong strategy for companies like CrowdStrike and Zoom.
How do we extrapolate to her point, to Kathleen's point, how these would be doing if we weren't in a world where Broadcom was warning about second half, cautious OEMs?
I think it plays both ways because a CrowdStrike, one of the reasons it does so well is because it's none of those things, right? It basically hits all of the favorite buzz phrases and categories of the day. But no, I don't think there is a good way to know. I mean, you're not seeing the companies come public that depend on China as an export market or, integrated supply chains across the two countries. But I do think you also have to keep in mind that these companies season after they go public, right? So Pinterest is a good example of one not really affected by any of these things. Comes public 2 months ago at 24-ish, well, that's where it first trades, goes up to 34, looks really exciting, then comes all the way back down. Now it's in the mid-20s again. That's usually kind of the way that the market digests these deals.